All right, you're looking at the 1987 peak overlaid on the July 2023 peak. And then if we follow the same pattern, we should sell off in October, bottom in November, and then recover thereafter. But the question I would ask is not whether we're going to sell off in October. I think we will. My question is, will you recover like you did in 1988 and 1989 and thereafter? You may not. And the simple answer might be that, hey, the Fed has already raised rates 11 times, and the thing that's holding up the dollar is the threat of more rate hikes. If the Fed suddenly reverses course because they see a stock market correction in October and they go, oh, we've got to cut rates to support the stock market and the economy, then the dollar will probably collapse. So the Fed is restrained from cutting rates as quickly or as much as we would like in response to a stock market crash a la 1987. If we get a gapping move down in the stock market, there may not be a Greenspan there to provide stimulus and rate cuts, because Powell is not in the same position as Greenspan. He may not be able to cut rates even in the face of a stock market correction. And if people get the idea that he's not going to cut rates, even as stocks are dropping 5% a day in October, if we get a whacking move down and everyone says, oh, he's still not going to cut rates, well, guess what? Stocks will fall even faster. They may not stop at 3,000. They might keep going. So I would say that there is some relevance. The 87 overlay is kind of interesting, but I don't think it necessarily holds that you're going to bottom at 3,000. I also don't necessarily believe that you're going to recover as you did in 1988 and 1989. Those two ideas, I don't think this will be an exact replay of 1987. I think any idea that the Fed might have that they can cut rates is going to be matched by a huge dollar sell-off. And they can't allow the dollar to crash too much, or foreigners won't buy our bonds. You know, the threat of losing all your money on a bad exchange rate trade in response to buying U.S. bonds, that's not going to make sense to foreigners. So I think the Fed has played this game since the late 80s with Greenspan, where you just, every time you get in trouble, you just cut rates and print money. Powell may not be able to do that. He might not be in the same boat as his predecessors. So that idea of printing unlimited money, kind of like MMT style, modern monetary theory, that bogus idea may not work. It may not work this time. The game is up.